Alrighty, Doc here from North America. It is TGIF. It's the end of the week. It's been entertaining. I don't know. It's been insane. Definitely crazyville. Definitely crazyville. But anyway, that's where we are. All right, let's jump over to what do we got going on there. There, you can see it right there. You can see the Swiss. Swiss is heading down, which means the dollar is heading down. There's pressure on the dollar, so I'm sure we're seeing strength in the pairs trades everywhere. When it comes to the, that's an interesting one. Let's check that out. Let's see, where is it at? There it is. What am I trying to get into? Can I hear it? I think I can. I'm trying to hear me at the same time. No, not yet. What's going on here? There we go. Hear me. Do I hear me now? Yes, I do. Okay, good. Just making sure there. All right. So, I don't know much more to say about this week except for it is just flat out crazy. And they tried to take the stock market up. The Dow Jones didn't do too bad. It's holding on to its relative gains, I guess you can say, from Mr. Bernanke's conversation on Wednesday. But the NASDAQ, the Tech 100 and so forth are feeling a lot of the pain. You can see the currencies kind of went up, hit the top of their range. A little sip of the tea here. You can see right there, it hit the top of the range. Where's that at? Right there. Hit the top of the range and kind of rolled over. This is the Swiss. And you can see here we have a white line turning down. Same thing here. We're in, I think, a second day. Let's see, it's line 20, right? No, line 21, yeah. So yesterday was the first day, today is the second day in a daily sell, so the pressure is on there. You can see two red bars on the Hinky Ashi. Let's see, what else can we see about any of that? I guess that's about it there, just at the fact that is a good example of the dollar moving down at the moment. And when we look at the whole pairs trade, all the different pairs trades out there right now, the dollar should be weakening a little bit. We keep on thinking it should because of the inflation and the interest rates haven't risen. So in old classical terms, that used to be a sign that the return on your investment was lower, not greater. But then when you look at, as I heard someone say yesterday, like the German Bund is trading at like 0.33 in the minus, and the U.S. 10-year is trading at something like 148 in the plus, so it's almost a 2 percentage point spread. Makes it awful hard to not want to buy U.S. Treasuries, and then I guess the security of it. If there is no U.S. Federal Reserve at this point, there is no world monetary system. So I mean, that's what's always kind of odd and funny when you hear people, different talking heads say things about the monetary system and this country or that country is going to overdo the United States, or the cryptocurrencies are going to overdo the dollar, or all currencies in general. And you got to shake your head and say, okay, if there is no Federal Reserve and there is no U.S., then there probably isn't anything at all. Because I don't see anybody standing up trying to take the lead in any fashion. If you can point one of them out, that'd be really cool to watch, but we don't really see that. So, I mean, China currency doesn't even float. So that obviously automatically negates them to be anything more than like a colony of the United States, since most of their equity goes in and out of the United States to them. So China, to me, has always been like a colony. It's not really like a competitor. I mean, it's just an angry colony. Could you imagine if Congo had gotten like a third of its GDP from England, and Nigeria got a third of its GDP from England when they were colonies? I mean, there would be demonstrative numbers, just incredible amounts of equity that goes to China. So that none of the colonies ever saw anything like that. I think they were known for taking money away from the colonies, taking natural resources and so forth, and basically absorbing them more than giving them a return on asset. So that's why I look at the currency pairs here and we watch them through the trend of their range, the way the Federal Reserve and it seems like the Federal Reserve. If it's not the Federal Reserve, it's nobody. So I guess it's the Federal Reserve and the central banks in agreement about keeping all currency pairs in a trading range. Try to keep. And why would they do that? I know if anybody's listening here, why would they do that? For stability. That's the answer to it. All they want stability. That's what QE is all about. Stability. They want. I saw. I'm going to digress just a teeny bit, but I saw a headline yesterday, something like the amount of companies that should have gone under didn't, and now they've increased. So in other words, whatever category they were defined as that they should have gone under, out of business because of their poor management skills, the Federal Reserve propped them up, and now they have many more that are in the same bad shape, and they're still in business. And so that's not the way it's not supposed to work that way. That makes money inefficient. Okay? So when we look at the pairs trades, all kind of trading in a range, at least there's some stability. Now, can you really say, does it make one country more inefficient than another? If it wasn't for Turkey and the basic explosion of poverty there and their poor currency going to the moon, it would be okay, I guess you could say that. But, it's not. Turkey's getting its head handed to itself by itself. They've done this all by their lonesome. They're responsible for it. That's the weird part about it. They're actually doing these policies. And I saw some interesting stats, too, on Turkey, as we digress a little bit more about the whole fact of, currencies pairs trading in a range. That was me and my tea again. Currency pairs trading in a range and not on fundamentals like CPI and PPI and inflation and growth and GDP and just all those. Then there's always that one little magic spice like goodwill. I think they used to call it goodwill. In other words, I like that currency because the government is a good government that follows policies, and they call that goodwill. Or they don't follow policies, and they're always doing weird things and surprising the markets. So that's they don't get the goodwill, that little extra spice of buyers and so forth, or sellers. So let me do this. I want to show you something. We'll do it when we get to the currency there. Let's jump over to the euro. Now the euro, a second day in a buy. It also is trying to perk up. It's down a little bit today, nothing major. It's not following the pathway, as you can see, of the Swiss there, where the Swiss is moving down, and the euro is losing against the dollar, just a little bit, nothing major, but it's in a daily buy. The weekly's having its issues, as you can see right there. It's just not really getting up and going. It's not getting that giddy up, as we used to call it, the giddy up, like a horse riding, cowboy here. And there it is there on J4X. You can see there's the euro, and you can see it's lifting through just like here, but we're not getting that giddy up in the weekly. So maybe next week. And then we dance our way over to the cable. The cable, did a pretty good job. It almost got up to the was that the point 0.23, I guess it is. And maybe it's working its way there. I'm thinking it might be. It looks like it's trying to. And you can see the weekly is inching its way up pretty aggressively. See how they hold up here. If they get through that 0.23 next week, I'd imagine we'll see the weekly starting to lift. And who knows, maybe it'll go back to the 132 area, I guess it is. Is that what it is? No, 130. Yeah. No, maybe. No, it's a little bit even higher than that. It's it's like that 136.5, 37 area, maybe something like that, or at least to the yellow line there, above 135. And so that's cable. Now let's see what that looks like on J4X, how it matches up right there. And you can see here on our Chicago, it's trying to roll over. See, it's starting to turn here on the J4X too. It's got all the little greens going on 3 days. We got 4 days of greens here, 5, 6 days of greens. In this case here, same thing, 1, 2, 3, 4, 5. The with a little red in the middle, and we have a red there in the middle, so that's pretty cool, with a red and a green. So the cable's been, kind of. They raised rates yesterday, or was it 2 days ago? They did what the Fed was supposed to do, and I'm still, as I said to Janos, I'm not convinced that they don't do it in February. I think they will. I think the moment he gets sworn in, pal. I know I keep on stretching my story or my speculation. That's what it is. Doc keeps on stretching his speculation of what's really the Fed up to and what they're going to do. And so far, not helping out too much, is it? Doc's speculation is nowhere near what his math is. The math is so much more accurate. But anyway, that's where we're at. And Britain did it. And so did the ECB. At least they made some nice announcements, the ECB, about tightening too. So, we just wait and see. Fight the inflation dragon. I guess, in many ways, in a speculative, esoteric way, everybody has so much confidence that the Federal Reserve can keep things organized and, profitable, that they're going to conquer inflation. I think that's probably out there in the back of a lot of heads. They're like, oh, first it was transitory, now it's okay, it's inflation now, he's going to whip it in like 3 months or 6 months. He's not. Inflation's not going to go away for at least 12 months to a year and a half. We're not going to see a turn on the downside of it. Maybe some flattening where it doesn't go up much more, but we're not really going to see much more than that. Just a lot of sideways action to freak everybody out. That's going to drive them all nuts. Right now, the inflation rate is somewhere in the 6.5s, and we figured it by the next quarter. By the end of the next quarter, it could be as much as 9 to 10. And once it goes double digit, they're going to get real nervous, because when you're looking at bonds trading at 1.5 and inflation's at 10%, wow. That's all I can say is wow. What a discounting factor. Which that's what QE is all about to begin with. It's to remove the fundamentals and just feel good. It's a feel good thing. So make everybody feel good. Everybody gets a trophy. All right. From there we go over to the Turkish Lira, and you can see here dollar Turkish Lira again today at another all-time high, and it got up to the 1724 area. And our look at I guess we should do, it's pretty much where we thought it would go, right to that area there. So that's pretty much it, I think. Something like that. Yeah, that was the target area. That is literally this one here, because check this out. The Euro Turkish Lira has met our target, the 18. It has pierced the 18 right there. So it ran up to it and through it. This baby needs to stop. If it doesn't stop here, we're going to 24. That's going to be a real freak out. So today, you can see it's trading over 19. The high is 1945. Let's show you on the J4X. And hey, middle age. Maybe the silver quants will get some life back into them. You would think you could knock me over with a feather. I'm totally, I want to say surprised that the metal players haven't jumped in. I'll give you a quick view before we run, but not run. Go to the next product. But there is the there's oh, what did I do? I hit the wrong button. There it is. There's the silver. Today it's trying. We're lifting up in here, but look at the weekly. Yeah, it's down, buried. Just flat out buried. Now, it could get some legs in here. If we can just get into the 23s, it wouldn't surprise me to see, the weekly really make a quick shift to the upside. But look at the green line buried down below. It's not even touching the manifold. So yeah, I hear you. And your gold, I don't understand why it's not at 19. I really don't. Oh, there you go. We're at 1812 now. So I think you said 1815 helps you out, puts you back into the saddle. Back in the saddle again. Also, another nice thing here is we can basically kind of remove that little dotty dot thing, because we're going to be putting in a weekly buy number confirm. It's been in the weekly buy all week long. It's been above, and we saw this trying to get some legs out of it, and this has been an interesting move from 1750 basically, or 1755 up to basically 1812 now. Keep on thinking it wants to. Remember, we talked about it trying to do this low or this high, one or the other, and that's what's that? That's a 1827, and this low is 1847. So we figured it would try to at least jump into that area. Looks like you're getting it. Back in the saddle again. Yeah. So we're seeing those two do it. Exactly. And it looks like without a doubt we're going to close in the weekly buy here unless they take it down again. And what I want to show you, let's see, what do I want to show you? I want to show you some of the stats from Turkey. Grant's newsletter had in a minute. It was very fascinating. Let's see if we can do this. There it is right there. Let's see if we can grab a hold of this. How do we do this? Okay, yeah, here's Grant's. And I want to... No, that's not it. Let's get rid of that. I want to show you the stats of what's going on in Turkey. It's a pretty powerful thing, Let's see if we can get it up there. Subscribe, blah blah. Okay. So I got to read it. Okay, so here it is. Here is Grant's. Let's see if we can do this. How do we do this? We go like this. Okay, so I'm going to switch screens. Check this out. So here's Turkey. Okay, control subject. Control subject. Here it is right there. Just one more bartender. The Central Bank of Republic of Turkey lowered its benchmark 1 week repo rate to 14 from 15 today, continuing an easing cycle that began at 19 rate 4 months ago. This comes in the face of an annual inflation pegged. Let's see what we can do about this. Can I get rid of that? I think I can. Yeah, there we go. There we go. That's even better. Where's that? An inflation peg. Inflation peg. 19 cycle began at 19 rate. Okay, this comes an annual inflation peg at 21.3, according to November's official CPI. See, that's one of the reasons you have to be nervous about inflation. It's up to 21.3, and here we are in the States up around 6, maybe 7. It's going to run to 9 for sure because of the way PPI and CPI have come out. Here we go. So, according to November's official CPI of 58, if you're using this math here with 21 and the CPI at 58, that our CPI right now is around 10, so it's fitting right with our 6% of inflation. By analysts, the inflation research group and a cool 115 as of today per John Hopkins economist Steve Hankel. So what's he say? The official CPI 58% by analysts, by analysis of the inflation research group, and a cool 115% as of today. Okay, so in November it was at 58%. Now it's at 115% inflation in Turkey. So that's what that's saying right there. So in November it was at 58%. Now it's at 115%. In an accompanying word, in an accompanying word, salad policy, salad like fruit salad. CBRT suggests that today's easing move will be its last, while concurrently deflecting blame for those price pressures. The committee decided to complete the use of limited room implied by transitory effects of supply side factors. Transitory. Why do they say those crazy words? Mr. Market has decidedly unimpressed as the lira continued its swan dive to 15.6 to the dollar, down an eye-whopping 42% in less than 2 months, 52% to date. Okay, so that's the action we see there. Let's go back up to it now, like so. And boy, has Doc's math been hot or what? We've been reading this product now for years perfectly. Just perfectly. I mean, maybe a little whippy here or there, but, you know, just perfectly. So, what else can we say? Let me think. I'm answering somebody now. There we are. Oh, I know what I want to do is I want to take a picture of this. Save workspace. Where are we going to put this? Let's move this down. Let's see. Let's just put it right here, like EURTRY. That's it. Just going to label it that. Save. And then we're going to attach that. Where did I put it? And then I'll just delete it. There it is. So yeah, that's, I mean, you know, our math has picked up this whole game. What's really fascinating is the fact that, you know, the weekly, it's almost doubled since it went into the weekly. Oh my God, it's just so disastrous. Just so disastrous. All right, so that is that. And so I just thought I'd throw that out there. It's, you know, because it's in tune to the reality around us right now, and that is we see inflation here in the States. So, you know, we got to be careful, traders. You know, I've seen wild inflation. Now we got a Federal Reserve that has carte blanche. You know, I mean, they will do whatever they need to do to keep stability. That is their mission. You know, they should now change the mission. You know, what is your job? Not, you know, not climate change or, you know, whatever other, you know, all these other goofy ideas. It's just like stability, financial stability. That's what it really is. That's what it all comes down to now. So, all right. From there, let's head over to the Canadians. See what the Canadians up to. CAD, baby, CAD. Right there. Moving down a little bit from yesterday. It's in a daily sell for one day, now on a second day of a daily sell. Let's just double check it on the fact check spreadsheet. Let's see. Put that right there. Where's Canadian? Right there, yeah. Yeah, it's in a daily sell for one day. This is the second day now. And what else can we say? So since it's going down, we're assuming gold is going up, and you can, I guess middle age has confirmed that. It's going up. And what else we got going? Oil. Let's take a look at it on J4X and see what the oil is doing. Right there, there's oil. And when it comes to gold at 813 now. They keep on pushing her up. 18. Was it last trade 813.6, something like that. Oil, kind of. What's oil do? Let's see. Let's switch the page here for you. There's crude. Okay, so crude is down a little bit, but gold is moving up. So you got crude going down. You can see it there on J4X. You know, pressure just sideways up. Now you can see here though, it's trying to turn up, and we are still in a daily buy for 2 full days, going on a third. So I don't think with inflation and all the other stuff going on, they're not going to be too fast to throw this stuff away. You know, commodities are definitely a great hedge against inflation. Tea time. Doc taking a sip of tea. All right, now let's just see what gold looks like on J4X also, right there. Come on, we'll catch up in a second. There it is. Looking very strong, looking very firm. Love to see this thing get to at least the 19s. Would be nice. What else can we say? It's nice to see silver trying to perk up. we're going to go to, let's see, where do we finish off? Oh, yeah. So what we'll do is we're looking at these two products, the commodities at the moment. Let's do this. Clean off the last 4 currency pairs. And then let's take a deeper look at silver. See what's going on there. So there we are there. Let's go to the South African Rand, which we would assume is heading down. It should be going down. It should gain against the dollar. In my head, it would make logical sense. Yes, indeed. Look at it right there, heading down. And we're in a daily sell now for a 3rd day, which is cool. And the weekly white line, you can see, is trying to challenge the top part of the manifold, so that's nice. At least they're trying to push it a little bit. And then let's check it out over here on J4X, right there. So we should be seeing this, this thing moving down, and that should be confirming, and we should be seeing the Canadian moving down and so forth, and maybe Middle Age will get himself maybe it'll run it to 1850. Wouldn't that be nice? Good pop to 1850. I mean, who would have thought? I mean, we talked about it, but when it went into that buy like 5, 6, 7 weeks ago, and I thought it had that fleeting look on it, like it wanted to pop and then fall down. I didn't think it was going to fall down. I just thought it was just going to go sideways again. That's why I said you got to have that offer out there tonight, to get rid of some of it, because it just had that look like they weren't going to have any real love for it. But boy, I can't believe they took it down into the 17s again. How did it? Come on, what is up with that malfunction? All right, now let's check out the ruble. Ruble doing, I guess, the same thing. Let's see. There's ruble. And they're perking it up. It's still in a daily buy and a weekly buy. And, as much as it looked like it was trying to roll over, it hasn't rolled over. You can see here, same situation. As much as it looked like it was trying to lift up, it's not lifting up, but just on the edges of it. And then you see green here, green there, green there. Doing the same thing, and we keep on fighting with our math to stay in this buy and keep on rolling with the homies. So you can see there, ruble 3 days in the daily buy and 5 weeks in the daily buy or weekly buy. So they're not letting go of that product, that's for sure. All right, now we'll jump over to the yen right there. And you see yen is moving down against the dollar, making, again, that emphasis that the dollar is weakening at the moment. And, that's a reason sometimes why gold goes up also, and silver. Maybe this is the real deal. If we can get these currencies to keep on falling, maybe we'll see some strength in the other. You can see the weeklies, it's in the sell. It's trying to hold on. They tried to get into the buy, it failed. So we'll see how they play with that for a little bit longer. Then last but not least, we go over to the Mexican peso. Right there. It's moving down a little bit against the dollar also. So more signs of possible strength in the metals complex. And let's put it up on J4X. Right there. And then that's pretty much it, the 4 pairs trade. So what we've done is we've seen all the pairs we normally look at, and I'm just waiting to see if anybody wants to look at anything else. And while we deviate from that, we're going to drift over to the metals complex and the energies. We'll dissect them for a while now. So let's go and put silver up here, right there. And let's go back down to here and take a look at silver, like so. And when we scrunch it up, does it tell us anything? We thought we were seeing a big reverse head and shoulders. That's what we thought. We really didn't. We were talking about this weeks ago. From here to there, we thought, okay, we got this big reverse head and shoulders going on. They're really going to take this thing up. Nah. What do? They smack a doodle on the downside, bring it into the low 21s. I was like, what are you doing? But we'll see. Now, I guess the trick is if it gets past this 23 and change, what is that? 23.40, something like that. We get through that. Maybe it does go back up into the 25.5 area. We would like to see a weekly buy, of course, and we would like to see it stay in a daily buy. And I think we are 20 days now. Where is it at? So, right there. So we're 3 weeks in a sell, which looks like easily going to be a fourth. But we're 20 days in a sell also at the same time. It looks like it's trying to come out of that. So that's the horse race that we're watching at the moment. And like I said, I really thought we were building a reverse head and shoulders about 6-7 weeks ago. We thought this was going to be the granddaddy of all the reverse head and shoulders. But no. Now maybe what it really comes down to is this is a new set of head and shoulders. So, does this one, let's say we take this line here. So it does this one right there. Then it fails, and now this is a shoulder. This is the head, and it takes it back up into the 25.5. A lot of people will be very happy to see silver at 25.5. A huge double bottom, possibly. Yeah, that's what I was thinking. So we'll see a second one now. Yeah, big, giant double bottom. I mean, why would they even find these products down into the 20s when we have inflation screaming in our face? It is a strange era, just in general on the planet Earth when it comes to finance. I'm sure we've seen strange things over the thousands of years, but this one really is starting to take the cake when you think about the idea that the level of people educated, the amount of information being provided day in and day out at the fingertips. It's like Nikola Tesla talked about basically the concept of cell phones back in like the 1880s. He was talking about one day people will have devices in their pocket and they'll be able to talk all around the world. And in an era where you have that now, it's really surprising that you see, how do I describe it? You see that they're trading bonds in a minus, like $14-15 trillion worth across the planet. Metals are being cast aside. I saw Bitcoin this morning. Let's look at that. Bitcoin was minus this morning. Right there. Went into a daily buy yesterday. Now it's already pushing into a sell again. And it's in a weekly sell. I mean, these are supposedly places to run to, not run away from. Very strange. Let's see what it looks like on J4X. Right there. Yeah, I mean, this is one of the weirder modern, let's say the last century and a half, where society is connected together like it is. This is definitely the strangest finance ever seen. And I guess you could point it to a couple things, but one of them is for sure is that this Federal Reserve situation, has given America the upper hand across the world. We had the upper hand for a long time in industry and science and math and so forth. We're pretty much had that upper hand, but now we've basically bankrupted the rest of the world. So, as bad as we are financially, the world is even worse. So it's like, wow, we basically have taken the world captive. America, 300 million people or 350 million people have taken an 8 billion population captive into our psychosis. And I don't know how else to look at it, but it's definitely weird. Really weird. So anyway, there you see it as I'm chewing on a pretzel. You can see there, this is supposed to go up, and it's not going up. And then when we go to the metals complex here, right there, gold is at least going up right now. As much as I'm still stunned, let's scrunch that one up. I am really amazed that they did that. But notice, in this case here, higher lows. So they made a lower low there. I guess it was way down in here at one point. And then a lower high, a lower low. Then it got trapped inside of it. Then we went lower low here, lower low there, and then a higher low. And now we took out the higher, made a higher high here, taking out this high and this high, but not this one. So you got lower highs here and higher lows. It's a triangle forming out of this whole thing. So we've got our fingers crossed that we get some positive action out of this whole thing. All right, let's see. And then, like I said about silver, you can see that there. So now let's check out a couple of the others. Maybe it is a big double bottom. Let's see what copper doing the same thing. Well, it was pushing into the buy this morning. Now all of a sudden it seems to have lost its push. But the other two products have not. And then let's take a look at platinum. Platinum looked yesterday, daily buy for a day, right? Yeah. But the weekly's still in a sell. I don't know. I'm not, with the central banks controlling so much now, there's not a lot of conviction, or in my mind, a lot of confidence. I just don't see, as much as we know the reality, the fundamental. How do I say this right? The fundamental financial reality says these things need to be a lot higher. They're undervalued. We see that. But it doesn't happen. And since they control the purse strings to all of world trading, they do $1.5 billion. No, I'm sorry, what did I say? $1.5 trillion in repos every night now. That's one of those things where they add money to the system, or they drain money from the system. They're putting 1.5 or 1.7 trillion into repos every night, repurchase, so to add cash, so that the banks are flooded with cash, and they're not allowed to loan. So it's really, everything is just upside down. There's no other way to describe it but upside down. All right, from there we'll go over to the crude oil. Right there, we saw, the spot front month Jan still holding up in the buy but down. And what did I see over here? I saw one of the back months that we follow right now. Where's it at? Right there. Doing the same thing, holding up though. But both of their weeklies are down. There's not a lot of oh joy. None of this is making a lot of sense. If there's anything that makes sense out of this whole confusion, it's the fact that we're at the end of the year, and normally, things do strange things at the end of the year. Because it's all for tax selling, or flattening out a position, or window dressing. It's something. Because remember, we're heading into today's Friday, so we have 4 days next week of trading, and then we have 4 days the following week of trading. So they got to get this stuff done before the end of the year. All right. Let's see. Let's see what nat gas looks like today in Europe. Looks like it's trying to perk up a little bit again. The all-time highs was 2 days ago. Got to about $35 or 107. Was it 117 or 1,000? 1,117 or something like that. End result is that natural gas is so expensive in Europe right now, just through the roof. Let's see, what else can we say about that? I guess that's about it there. Let's look at American natural gas, which is trading way underneath all that stuff. All right, right. There it is. Yeah, so I mean it's trading at, we're down today. You can see that here, our natural gas is down. You see it on J4X there. And right there, same thing. So, we've backed off dramatically. Also, we're having a lot of warm weather along the coastline here, so That's not bad. I mean, we're, I guess in Celsius, we are 17, 18, 19, hanging out in that area, which is really nice. We've had some sunshine with those days. Yesterday I think it got up to 64 Fahrenheit. So what is that? That's 18 or 19, Celsius. What else can we say about all this? Maybe 20 Celsius. And that's it. That's pretty much the energies and the metals. And they're all just kind of cruising along. Metals, I mean, to a great extent, the energies are heading down, which is positive to help cut inflation to some extent. But unfortunately, they've doubled for the year, so they're kind of hot, And when you don't have a growing economy anymore, that doesn't help any. Now let's take a look at stock indices. You can go check those things out. It was one fun, wild ride yesterday in the stock indices. And today's triple witching. So the S&P and the futures, stock indice futures expired, the December ones. This is the front month now. So they took this as Powell, where he basically said, I'm not raising rates until I'm done doing all the things we do. And then yesterday they lifted it up and gave it all back. And today they're giving more of it back. It's starting to go after the lows of early December. And they're pushing their way they're pushing down past the lows of November. Is that right? Yeah. So the lows in November, that's October. So basically we're past the lows of November, and we're heading towards the lows of the last 2 weeks, early December. Figuring that the next move is something like this, but you got if this was October, I'd be buying 14.5 puts here. 14,500 puts. I'd be buying them for a penny, because they're probably going to go to $1. And so, but at the end of the year, anything can happen when it comes to just, as every sell-off will be met with buyers who need to do the buying that they have to do. Now, the S&P 500 did not go into the sell yesterday, and you can see this was, Mr. Powell's, unicorn day, and then you can see they sold it mostly down, and today it's now getting down to where it started from a couple days ago. Let's see, I'm already long corn, but thought about buying some July bean calls, Doc. They have plenty of time on them. Yeah, July definitely. Here, let me show you what we got going on there. Let's go over to J4X to start off with and put the beans up there. Corn keeps on flirting with that $6 area. It doesn't seem to want to let go. What is it? I just had it. I went past it. There are soybeans. There's soybeans on J4X. It's perking its head up pretty well. You can see that. All our math is turning up here. Let's check it out over here. Yeah, I would. You would have to assume that's an inflation hedge, if nothing else. I mean, you would think that the gold and the silver are inflation hedges, but anything's possible with them. All right, now this is the spot right here, Jan, and it's lifting up nice. We're in a daily buy for a second day, weekly buy for 4 weeks, going on the 5th. And then here's May. We have someone following May. We don't have anybody following July. Do I have July there? No, not yet. And then here's May beans. Trying to get into the buy today. Same thing, but been in longer buy, much longer. This is going on a 6th week, whereas the other one, where's it at? There again. It was 4 weeks, going on 5 weeks. So, yeah, it does show the strength. You can see here it's reaching the top of this long thing that's been going on since September. Another double bottom thing you got going on there. What was interesting is to watch the wheat. being in a weekly sell for a couple of weeks, and beans finally turning up. I thought that was classic. The moment I saw wheat go into a weekly sell, I thought, I wonder if beans, since they're in a weekly buy, keep on rolling on the upside. And sure enough, they have. Now let's check out the corn. There's March corn right there. And it went into a sell, and I guess it's trying to get back into the buy here. We have a lot of corn traders. Let's see. There is September corn. And it's holding up, and it's in a buy and not looking back. But again, it's discounted by about 20 cents compared to the other one, almost 30 cents from the March contract. And then May corn. There's May corn. And it's trying to do that's still holding up in the buy by the hair of its chinny chin. And it's still not weekly buy for a long, long time. Me love you long, long time. Yeah, it's been in a buy since September. Since the low fives. It's been in a weekly buy. And went up to it did touch 6 and then rolled over. So yeah, the beans to me, as you can see on Dukascopy, I keep on thinking, as long as we keep on seeing them in buys, daily buys and weekly buys, I think they could take the beans up. Would they explode? Wouldn't it be, notice that they really didn't, can I say they didn't really participate compared to the others? When we go back and we look at those products, and we look at, I think we've done this before, you go back and look at March corn, right? And we scrunch it up. Over the last year. And March corn at the beginning of the year was trading in the 4 1/4 area. It went to like 6. And we saw new crop corn go as high as like 7 and change. Okay, so from the 4s to the 7, say, that's a pretty good move. Now, when you look at beans. Beans, basically, same time period. Let's move that over a little bit. Beans were in the 12s already. They went to the 14s and change. And can you really say percentage-wise, they didn't really do anywhere near what wheat. Did I show you wheat? No, let's show you wheat too. Wheat's the same way. There's March wheat. And March wheat went from back in January, from the, I guess you could say, at best, the 6 and change to the 8.5. So basically, wheat. That's why I really thought when I saw wheat go into a sell, that would be more of a confirm that soybeans were going to take a run to the upside. Just because both of them, compared to the corn, have been very firm, but they're not as explosive. And obviously beans have been the weakest of all of them. So, it makes you wonder, is there room for an explosion? I was just a kid in the 70s, inflation moves. How were the pretty explosive looking at old charts? Yeah, I remember standing in the pit out in Chicago, and I remember, soybeans might have been trading like $7 or something like that, and they ran to like 11 or 12. I mean, people were like flipped out. And beans had a tradition of running up into the spring, but and then they fell back, and they didn't have the staying power. They never seemed to have the staying power. That's the difference of today. Everything seems to have the staying power. So, it runs from 6 1/4, 6.5 to 8.5, and here we are still trading in the high 7s, in wheat. Beans, not giving up. It was in 12s, 11s and 12s a year ago, and we're in the 12s now, going for 13. So there's a lot of staying power. They're not very fast to get rid of these things after they've gained. Corn, same situation. We were like 3.5, 4. And we've gotten up to 6.5 to 7, depending on what contract it was and when it was during the year. So, the staying power now is different because there's so much more money out there. Also, options were not legal back then. Options became legal in '76, and by 1981 or '82, all the commodities had options, and so that opens the doorway for a lot of big positions. I mean, you can buy the beans, sell the calls way up, buy some puts to protect them. You know, it's a whole different game now. So, and it was a healthy game too when you really think about it. Hedging. Before, traders had to just basically sell the contract or sell a stock short in a box, that type of thing, to hedge. Now, and it was like a tax play. Now you have the zero-sum factor removed, and you have a lot more opportunity to have much bigger positions, way bigger positions, which is what created this volatility to begin with. I remember, I always say it here, the old heads on the New York Stock Exchange when I was a member there, they were complaining all the time about the options and the volatility. They were used to the idea that the stock went up or down like a half a point for a year. That was big, to go up or down a half a point. And now all of a sudden they're going up and down half a point a day. That had them all freaked out. Now, because of the options, people used to buy stock meant that they wanted to be long. With the options market now listed and active option trading, people can be buying stock to be short. That's the weird part. So, and I guess some of you out there are saying, what is he talking about? What do you mean I'm buying stock to be short? Well, imagine if you have big short option strategies on. Okay? And you're basically short the company now, the stock in a sense. And someone comes in and buys like 10,000 or 30,000 shares of stock. Back in the old days, that meant something. Now, if somebody comes in and buys 1 million shares, it doesn't mean anything because they might be short over in the puts. So just because they bought doesn't mean that they're getting long. It means that they're flattening out. And so that's what the problem is, and that's what the old heads were really freaked about. They were totally freaked about that all the time. So, you flash back to your question about the futures. Back in the '70s, you didn't have that. You didn't have that opportunity. There were options put on the bonds. Someone asked me a question last night at dinner about government savings bonds here in the United States. And he said, I think I'll go buy some savings bonds for my grandchildren. I said, they don't exist. And he said, what? And his wife looked at him and said, no, they don't have savings bonds anymore. That's because and I said, that's because of quantitative easing. They can't afford to have little bonds like that floating around. Money would pour into them like mad. So they had to stop that. Because they were 7-year maturity or 10-year maturity type of things. So, that's about it. I guess you could say right there when it comes to understanding the volatility and inflation is a different animal because of the listed options market. Now, we did go, remember, when they became legal, within a few years, major inflation topped out, under President Reagan. Somewhere going into the first year of his presidency, they topped out, and they sold down for a couple of years, and they've been selling down ever since. We've gone from 20% bonds all the way down to, 1.5% bonds now, that type of thing, 1%. So, there's a lot. It's hard to, it's not. How do they say it? It's not apples versus apples or something like that, or oranges versus apples. It's a whole. Just because they're round doesn't mean that they're an orange. Just because they're round doesn't mean they're an apple. That type of thing. That's where we really are now at this point in time. So we just, so now what they're doing is with we can go back to the idea of talking about gold and silver and all. That's why they're not reaching for this stuff. That's what makes me always hesitant. When there's strength, you know the Fed, the old saying, don't fight the Fed. We know that the Fed wants these products to be lower priced. So every time it runs up, you know that the Fed is looking at that and saying, well, I'll sell that. I'll easily sell that. You know what I mean? That's why that time, middle age, when it popped up and you said, I needed to go here, I said, well, you can probably, put your offer out there because it's going to be like fleeting. It's going to get up there and disappear. Because I know that the Federal Reserve doesn't want to see silver go up. It doesn't want to see gold go up. And if they don't want it to go up, it's not going to go up. That's pretty much what it comes down to. That's how this world is nowadays. All right, traders, everybody have a safe and a smart weekend. We will catch you guys and gals all on Monday, TGIM. That'll be the week of Christmas now. We're coming into it. And so jingle bells to all, I guess you could say. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, everybody, have a safe and smart weekend, and we will look at this stuff again on Monday. If the Fed can keep giving us snacks in the metals, I'll trade them short term. Yes, exactly. Well, no, I think you're doing it the right way. Stay with what you're doing. But the thing is, you got to have your offers out there more often. The only thing you need to do on a short term basis is try to take more profits, because you may not be able to get the runs that you want. So remember what happened last time? I said, how did I express it? It's like what Dukascopy does. Do the binaries. So what you do is you buy the calls like you normally do, and then when you get a chance to take a profit, you take half of it off and turn the rest into a binary, because you can't trust content. Let's put it this way. When it explodes and they let it explode, you'll be happy that at least you had a binary on versus nothing. And that's really what it comes down to. All right, middle age, I will catch you on Monday. Ta-ta for now.